What's up, everybody? This is Jimmy with Trading Decoded. It is July 31st, 2024. It's the end of the month. It's FOMC day, and holy smokes, was it expensive to play. On top of that, we got a whole bunch of crazy movement before the report, which is unusual for an FOMC day. So we had a lot of blue books in the community today just because the cost of the contracts were enough sticker shock to make people hesitate or not trade at all, which is absolutely nothing wrong with. And then as you move closer to 2 o'clock, the contracts just get more and more expensive because the volatility is continuing to climb throughout the day. It never really came down a whole bunch either. And then trying to trade technicals after 2 o'clock is a waste of energy. If you want to gamble after 2 o'clock, by all means do it. I've seen one too many people blow up their trading accounts. So I choose to try and tell people not to trade around 2 o'clock or after. But it's your money. You do what you want to do. With that said, I took a few trades this morning that paid pretty well. And again, you had to get around the cost of the contracts to, not hesitate and things like that, which is a tough pill to swallow, but doable nonetheless. Technicals were working in the morning, and we are going to go ahead and launch the charts and show you what we did today. Now, with that said, I had to take my son to an endocrinology appointment this morning, and so I did my charting at 7:30 today. So if the lines in pre-market are off, it's for that reason. Now, they did hold until about 8:15, and then we broke out of the range and started to make it up to the lines that I drew. Another thing I want to talk about is how crazy the 50% retracement level is. So we have resistance here, and we have first targeted resistance above was this yellow line. So I find the halfway point when it's more than $1 move between supports or resistances. I find the halfway point. That's 50% of the way. Look at this. It got above resistance, went right to that 50% point, rejected it, got through it. Okay, tried to hold it as support, ultimately coming back up from here. It's crazy how often these things work. But we were moving up graciously into pre-market, into the open, and was very much wanting to play calls. I'm not opposed to calls. I mean, I don't really understand why we had all this happen other than a Microsoft earnings or something along those lines, or maybe something leaked about FOMC. But either way, it doesn't matter. We're playing the chart, right? But as we move closer to the open, we come to 925, which is when we put these call put lines on here, right? First line is right here at 549.15. Now, where does that come from? It comes from this resistance right here. Our put line is at 548.74, which is right here. Now, if we make it to through 548.74, we're looking for the next support down, which is right here. Okay. Can you guys see that that's support in pre-market? We moved up. We attempt to move lower. We couldn't. That's a new support. It's the first support below this line because this support, and then no attempt to really move down from that point until here. Look at where these candles terminate, guys. Market opens. Oh, but Jimmy, we went through the call line. Why didn't you take that? Well, number one, we were moving into the open, coming off of lower highs. I don't play calls off of lower highs. Number two, take a look at where Qs were stuck at the open, at a line of resistance. Okay? And we had a gap below us on both charts. We opened up above yesterday's high. All of those factors had me getting into puts. And even if you didn't get into aggressively into puts, we crossed the put line. And where were we looking for? The next support down, whether it's the line that you go by or the support that's actually in pre-market. That trade right there was a 19.2% winner. Volatility was crazy. Probably didn't get the greatest fills. And when you market order into these things, sometimes you pay more, sometimes you pay less. And sometimes your fills in and out aren't the greatest. So this was a 19 move, 19.2% move for my particular case. I know people in our community who made more than that. I know people in our community who made a little less than that. Either way, the trade worked out exactly as we planned it to be, and it doesn't matter if you took it or not. The information that I'm providing you is to not teach you how to take my trades. It's to teach you how to understand why I consider the trades that I do take. Because that's what's important. How much money I make or how much money you make is irrelevant, because it doesn't matter how much money I make or you make. It matters on whether you're comfortable getting into your trades. And the only way to be comfortable getting into your trades is understanding why you're getting into those trades. Okay? So we wanted to break support coming off of lower highs, meaning a downtrend. When we break support in a downtrend, we're expecting SPY to move to the next support. It's not a complicated scenario, but that's all these call put scenarios are every day. I have aggressive traders in my community. I'm an aggressive trader. I like to play these kinds of plays. I like to be done early in the morning. Okay, we have several people that would like to wait for a trend to develop. I got no problems with that. Trade your plan. Trade what is comfortable to you. Price action is still price action no matter what time of day, unless it's FOMC day at 2 o'clock and later. Then it doesn't really matter. The price action it goes out the window. We're not even going to talk about after 12 o'clock today. But as we pull back here, there's one caveat that a lot of people probably didn't notice in this particular move. We have no higher low put in this move. Now you're probably saying, well, Jimmy, look at that move to the upside. Why would you consider puts here? For that reason and that reason only. Super aggressive put entry. It was a good resistance here. It's still a resistance here. And I think at this time, Qs were coming back. So the Qs had just come off of resistance. Now the Qs started to move up aggressively before SPY did. And you can look at the Qs. NVIDIA, all the tech had an amazing day today. But Qs broke, okay? And again, it's not for the faint of heart, but we hit resistance on the Qs. So you have Qs at resistance, you have SPY at resistance, maybe you go here. That same candle also breached the put line again while the Qs were printing red and down to the same support we were looking for before. Okay, whether you got out there or here, it doesn't matter. And then while people are in this trade and this little green arrow starts to show up, that's when I tell people, hey guys, the Jim indicator is starting to show a green arrow. Now, when you're in puts and this starts flashing green, it doesn't mean that the move is necessarily over. And it certainly does not mean you should buy calls right here. In this case, it would have worked out beautifully, but no, you got to wait for break of structure in conjunction with momentum before you get into that. Like, I would be okay buying calls on this green candle because we're on support. We are putting in higher lows and we broke the wedge or whatever you want to call this to the upside. Okay, this is a good potential entry. This, not so much. Not for me anyway. But if I'm in puts and I start to see this indicator that's telling me momentum that may have kept me in puts is slowing down because something in the market is rotating in the other direction, that's good enough for me to start to say, you know what, if I'm going to hang on to this, let me put a stop in profit, trail my stop, whatever it is, so that if you get this green big candle that doesn't come back down, you've got out with profit. Okay? So if you know you want to stay in a trade longer than your planned exit spot, protect yourself from yourself. And that is a point we are going to talk about today because lo and behold, just like every other FOMC day, somebody blew up their account. Well, let's finish with this reasoning for some of these trades, and then we'll talk about it. Putting in higher lows. Okay, so when we're putting in higher lows, the first thing that comes off the table is puts. Okay, I'm not looking for puts during higher lows. Higher lows means buyers are getting stronger, not weaker. That means there's more pressure being put on resistances, not less. Okay, I'm more worried about resistance failing off of higher lows than holding. So calls become the go-to. Now you have options here. You can get in because we breached the call line. This time is different because we're putting in higher lows. And I believe Qs had already broke out of a range they were in. Yeah, so Qs just breached above resistance as well. So we're expecting the Qs to continue up to their next resistance. We're expecting SPY to continue up to its next resistance. Those both happened. If you missed that entry there, you had an opportunity to buy a pullback to support at 10:04 during an uptrend. Okay, that's the important part. At 10:04, Qs were still holding old resistance turn support. Okay, so we couldn't move lower. Qs were still putting in higher lows. We're expecting Qs to continue up. And at this time, ADD, if I'm not mistaken, it started to print green at this point. Yeah, so 10 o'clock, got a big green candle on ADD, and we did start pulling back. But at 10:04, we were looking like we were putting in a higher low on an ADD. But either way, green, green, green on all the things. And that's why you got the green indicator showing up when it does, by the way. But anyway, we crossed the call line. That's why this arrow is here. That's why the suggested trade was there. SPY, Qs, all the things were moving up at this time with higher lows. That's momentum, and momentum carried you to the next line. Didn't get through it this time. We pulled back to support, off of the support, right to resistance again. We closed above resistance. If you missed that, we turned it into support, up to the next resistance. And in this case, we closed above resistance again. It didn't hold, okay? And you don't know when these trades are going to stop, guys. You don't know where they're going to end. But if you're afraid to take a trade because of the unknown, then technically you would never be able to take a trade because nobody knows what trade is going to work and what one is not going to work, okay? All we're doing is putting probabilities the best that we can in our favor. Now let's see what is going on at 10:18 on the Qs. Maybe the Qs are at resistance. This is something you cannot ignore, guys. We pulled back to support. We bounced off support on the Qs. We ran right into a level of resistance. Whether you choose to get out of your trades on SPY based on the Qs chart is completely up to you. I will tell you this, though. If you constantly ignore the Qs in your SPY trades, you're going to get caught off guard often. Okay? Look at SPY. Nowhere near a line of its own resistance, but it stopped dead in its tracks because the Qs hit theirs and pulled back. SPY hit it, pulled back. Doesn't mean the move's rotating down completely, but if you're looking to maximize a trade or say to yourself, we just closed above resistance during an uptrend, should I buy calls here? You better check the Qs first. If they're sitting at a line of resistance, no, you shouldn't buy calls. That is why there is no arrow here. Qs had no room to go. Qs had no place to go. All right? Last trade we talked about before FOMC, or I'm sorry, second to the last, somebody was asking me, Jimmy, where would be another good call entry? And I said, we just got above resistance. We closed, buy a pullback to support. We're hoping it moves up to 551.51, which is our next line high. But as we were in this trade, because I was in this trade as well, so just so you guys know, I took this trade, I took this trade. First one was 19.2%. The second one was 28.3%. And my third one, which was a nothing burger because I was either going to make very little or make it to my profit line, was only a 0.5% win. So I put a stop loss just above my purchase price so that I couldn't lose money, cover my contract fees. And I got stopped out on this red candle. But what we were hoping for, we bought the pullback. We're looking for the move to continue up to the next line. Here's the problem. First of all, the GIM indicator started to print green. It started to flash up here. That's what I told everybody. Hey, guys, if you're in calls, it started to print red. The GIM indicator's flashing red. This might be the end of the momentum that is carrying us up currently. So you had the opportunity to get out, but what I didn't notice because I wasn't watching it at this time, like an idiot, It's at 10:39, and this is part of my routine all the time. I'm constantly watching the Qs. Look at where the Qs were. Right at resistance, once again. Okay? This was as equally or a better reason to get out of the trade than even having to wait for the Jim indicator. I keep calling it that, but our momentum indicator that I made for our community members to start telling us that, hey, I know you're not watching the Qs right now, but there might be some weakness building in the market. I was going to hold on to this trade till I got stopped out or till I made it to my profit line. So I wasn't worried about maximizing a return here. I made $50 on the trade, but that's on 5 contracts. So it wasn't horrible, but it gave you the opportunity to maximize what that move was willing to give you at the time. If you took it, great. If you didn't, you either stopped out with a small profit or a break even or a small loss if you stopped out at all. And then on this move down, same thing. Now, coming off lower highs, so we're expecting support to fail. So my aggressive traders may have gotten in here expecting this support to fail. They may not have cared about this particular support right here, but I did. So I told people I would personally wait for this support to get breached. We'd be looking for the move to continue down to here. If it gets down from there, we'd look for here. Okay, we didn't quite make it all the way down to 58, which is where we were hoping to get to. But at the same time, guess who ruined and spoiled our party? The Qs. Qs could not move lower. In fact, they bounced off support. Right when we get out of this trade? 54. Yeah, Qs right on the support. Right on the support, guys. I'm telling you. Sometimes these lines of support and resistance line up perfectly between SPY and the Qs. I'm also telling you, when the Qs are running the market, which is almost every day, you better be paying more attention to the Qs chart than your SPY chart. Because SPY, although it does respect its own levels of support and resistance, will seemingly stop in the middle of nowhere, and it's not for no reason. It's because the Qs hit a level of their own. Mark my words, learn to use the Qs as a tool for your SPY, your SPX, and your futures trading. Guys, I'm not holding anything back in these videos. You absolutely can stack the odds of winning these trades in your favor. I'm trying to teach you how to do that. Please just try it. Don't even spend money on it. This is costing you nothing to watch these videos except your time. Okay? Just mental trade these things. Watch how often higher lows end up making calls a better choice versus puts. If we're moving up to a level of resistance and we're coming off higher lows, start keeping track of how many times that resistance fails instead of holds. It's not 100% of the time, but it's way more than it doesn't. That's useful information for you. Because if you're saying, man, that's a strong resistance right there, you ignore the higher lows, you might be interested in buying puts here. Where I'd be in your ear saying, I wouldn't. We're trending up. We're putting in higher lows. This is more likely to fail, not hold. And if you skipped that trade and you didn't buy puts there, and we moved up to the next line, you're thinking, damn, higher lows saved my life, or my trade, rather. Right? Now, there's going to be times where we're coming off higher lows, we hit a resistance, and it shoots right down from there. For that, I apologize. Kind of. I'm not going to be upset for teaching you how to be on the better side of more winning trades. I'm not going to be mad about that. Yes, it's frustrating when the statistics fail us. This is a wedge leading up to resistance. The wedge almost always breaks high. Almost. You will find every wedge that doesn't break high. You'll only trade the ones that don't work out probabilistically. I understand that's the way life treats us, right? You could skip 1,000 wedge breaks that go in the direction we expect them to, and the one that you take is going to be the one that does the opposite. Trust me when I tell you, though. Just go back, look for yourself, find wedges using levels of resistance. You're putting in higher lows, coming up to those resistances. Just go across the course of a week. How many more times does it break up versus down? Just look for that kind of stuff. Likewise, lower highs, okay? We have support levels here And here, we're coming off lower highs. I would not buy calls on these support levels. Okay? So yes, I wouldn't have bought calls here. We know that it bounced off of it. You didn't know that when we were coming down. You were probably thinking, ooh, I'm going to buy puts. I'm going to buy puts. And maybe you did, right? But when do you buy calls in this scenario? Jimmy, the market's so green. Where should I consider buying calls? You have two options. The aggressive one, wait for a break of this move down, preferably off support. Or number two, wait for a higher low to develop so that you know that the buyers are attempting to push higher. Also, always look left. Make sure that if you do buy off higher lows, you have room to move. Because if there is no room and you're buying calls when you're 10 cents or 5 cents away from resistance and it stops moving up, you're putting yourself in a precarious situation to become a hold and hoper. Because if it doesn't continue to go up through that line and it comes down, you're going to take a loss, and you're not going to want to take a loss, so you're going to hold on to a loss. And if it doesn't recover, you're going to hold it till zero. It happens every day. I don't want to be that guy, but I'm trying to remind you how bad you are for yourself, right? One of my favorite things to say, and I say it at least 5 times a day, is protect yourself from yourself. Know your weaknesses. Know where you struggle in this business and protect yourself from facing those struggles. The only way to protect yourself from losing additional money is having a stop loss in place, because that takes the decision out of your hands. It's mechanically set by software, and the software doesn't care. It'll say, all right, you told me to stop out, no problem. Whereas you say, I don't want to stop out. I'm down $350. I'm going to hold on a little longer. And then next thing you know, that 350 turns into 450, 550, 700, and then the cost of the trade. And then you get to the point where you say, you know what? I'm already down this far. Who cares? Screw it. I'm going to hold it to zero, or maybe I'll get lucky. But when you hit that point, please promise me one thing. Just don't average down. Don't average down, okay? Sometimes it works. You'll only remember the times that it does, and you'll completely forget about the insanely high percentage times that it doesn't. Okay? Our mind constantly plays tricks on us. We as traders are our own worst enemy. We make this so difficult. You are fighting against yourself, not the market makers, not Charles Schwab, not the news, not Donald Trump, not Kamala Harris. Not whoever you're blaming all of your problems on is going to keep you losing, because you'll never address the problem. You know, you can blame the news and then you stop watching the news. Well, shit, I still suck at trading. What's happening? It's not the news. Well, maybe it's an indicator. You'll cut out your indicators or change them. Oh, I'm still losing at trading. It's not the indicators. Oh, maybe it's the guy on the microphone trying to tell me how to protect myself for myself. Nope. I'm not listening to him, but it's still losing. You guys, as long as you're blaming something else, you can never address the problem, which is you, me, you as an individual trader. We make this difficult. If you know what part of your trading is weak, then you need to learn how to avoid it, not how to fix it. Sometimes fixing a problem, the easiest solution is just to stop creating the problem. If you know that you hold and hope, then why are your orders not going in automatically with a stop loss in place? Oh, because, Jimmy, it pulls back and then it stops me out and then it does what I thought it was going to do. Okay. Keep doing you. Keep doing you, and I'll keep reading the DMs you send me about how you're destroying your account, and you've been at this for 2 years, and you just keep getting more and more red trades. What am I doing wrong? I don't know. I've told you everything you're doing wrong. You just refuse to accept because nobody wants to make changes. This is not easy. Okay? And it's not something that you can do without emotions. Emotions destroy us as traders. Okay? There are some ways to alleviate or lessen some of the pressure that emotion puts on our trading, but it only comes with the creation of discipline. It comes with the understanding that no matter how bad you want something, the market doesn't care. You are powerless to the market. You have to know that. You have to accept that. You can only make decisions that are going to affect you. Just because you buy a boatload of calls doesn't mean the market's going to say, okay, well, Jimmy bought a whole bunch of calls. Let's go up now. We need to pay him. No. It doesn't know we exist. It doesn't care about us. And I know it sounds silly to have this conversation, but if you don't start to grasp this thought process, you're going to constantly struggle. Right? Buy your calls on pullbacks during uptrends. Pullbacks to support. If you want a solid level of support, make sure that support exists both on Qs and SPY. Think of that as a double thick support level for you. Does it mean it can't fail? Absolutely not. Does it mean you can buy calls here and not worry about a stop loss because it's both on SPY and Qs? It has to bounce up? Absolutely not. But it's going to give you a better chance of winning than if you just buy calls in the middle of nowhere. Well, Jimmy, why don't you just buy calls at breakouts? Sometimes I do. But you have to understand why that is more risky than buying on support. When you're buying a breakout, you're buying momentum that's already in progress. When you buy on support, you're buying with a group of other buyers who are helping maintain that level of support. Here, a lot of your buyer friends may be saying, well, we're to the next resistance. I'm out. I fought a good fight. I'm good. I made my money. I'm leaving. Well, all of a sudden, your band of brothers just ditched you, left you holding the bag. Are you going to stay in there? You might, and you might be rewarded for it. But you've lost a lot of your momentum. So buying resistance breaks without Qs or SPY adding to the help, or ADD, right? At least make sure the market is moving up. Something like this. If you're going to buy breakouts, make sure momentum, if you're volume watchers, make sure momentum is moving up. Make sure you're getting a push of volume or something. Okay? Here's another thing I want to show you guys. Wedge breaks. Okay, this is another thing. I know this video is getting a little long. I'm sorry. I get on these tangents because some people hurt themselves today. And that bothers me because I did everything in my power today to prevent people from trading, especially from 2 o'clock to close. But of course, people know better, and it's your money. You know what's best for you until you screw up, and then you want to know what's best for you. I tried to warn you for the majority of the day. All right. My recommendation on FOMC days is skip it or treat it exactly like it's a casino, because it's exactly what it is at 2 o'clock and on. Okay. It's a casino. The technicals don't matter. You might buy a position. You hope that it's going to work out, but you better be in a position you can afford to lose on. Okay? Because there's no way to tell if it's going to go up or down. Wedge break. We were talking about somebody wanted to buy calls or puts. I said, wait, we're in a wedge. Okay, this was before we broke out of the wedge. I said, you don't buy anything while you're in the wedge. And just because we break out of the wedge, up or down, you got to look left to make sure you're not going to buy puts when we break out of the bottom of the wedge and land on a support level. Okay? Guess what happened? Now, this person hopefully didn't buy these puts, but we were talking about it in here. We closed below the wedge line barely. We knew support existed right here. We knew it existed right there. We talked about this whole thing. We break out of the wedge. We hit that support, and right back off of it. Oh, but Jimmy, we broke the wedge high. You're absolutely right. What is directly to your left? Oh, a double top. Okay. How's that work out for you? We hit the double top and immediately stopped moving up. And right back down to support again. This time we got below it. Yes, but you're running right back into another support. So you get below this one. The next one is right here. Look at where all those candles stop, guys. Well, Jimmy, if you trade like that, you'll never take any trades. No, I take plenty of trades. I take them when there's an open chart to take them in. This is exactly why I don't trade later in the day. Yes, you're making more and more of these levels of support and resistance as the day goes on. I can't unsee those. Those matter to me. Every trade I take is based off support and resistance. So as we make a whole bunch more of those lines, this chart starts to look like a disaster. It starts to visually look like this to me. I see lines that are everywhere and so close that there's no room to take a trade. That makes it easier for me to be done. On top of that, theta is working overtime against you after 12 o'clock. Same day expirations start to lose value tremendously quick during pullbacks later in the day. Okay, now the final thing I want to bring to your attention, I've mentioned this on previous FOMC days, and I'm going to say it again today. The market is already priced in what it thinks is going to happen. Okay, the only reason the market is going to react violently is if it doesn't get what it expected, meaning a surprise. If it gets surprised, it does irrational things. If it gets what it expected, it might move up and down, but it'll settle back down usually where it was before the news dropped. With that in mind, where were we at 2 o'clock? We were right here on 550.30. 550.30. I told everybody leading into this point, I said, I don't know if this thing goes up or down. I picked up and then I said it was going to come down. Okay. I thought the opening candle was going to be green, but we moved up and then we moved down. But I told everybody, if there's no news in this report that the market is surprised by, my closing price guess is going to be 550.30. Well, here we are 2 hours later, 550.30. Look at this. Yes, we did a lot of moving up, a lot of moving down, up, plop, right on the line. It's crazy how controlled the algorithms can manipulate the market. It's insane. That's not an accident, okay? It was there when 2 o'clock. It did all kinds of crazy stuff based on a report and Jerome Powell speaking, and then it plopped right back down to where it once was. Okay? So just a little, go back and look. It happens often. Now, if there's a surprise, a good one, it continues to run up and off the top of the chart. If it's a bad one, right out the bottom of the floor. Okay? But if it's a nothing burger, like last FOMC, it stays pretty tame. But that's pretty much it, guys. Watch this video in its entirety. I know it's the end of the video. Most of you are already gone. I'm trying here. I get DMs, good and bad, every single day. I know what we deal with as traders, myself included. I know how to avoid them because I know my weaknesses and I've accepted my own personal weaknesses. I'm begging you to stop blaming everything else, even if you think you're not. You most likely are. If you're trading using only indicators, you're blaming indicators for why things aren't working. Okay? If you're an indicator-based trader, you should be using indicators to support your own plan, not an indicator to get into any trade. Because when that trade doesn't work, the very first thing you're going to say is, well, RSI failed me this time. No, you failed you. You ignored what the chart might have been screaming at you because an indicator told you so. Okay, you're just passing the buck on to something other than yourself. You have to accept these things. And when you do, you will start to become a better, more efficient trader. I promise you. All right. So we're going to wrap things up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. Like, join our Discord community. Well, we'd love to have you. There's a link down below. First week is free anytime. If you like what you get for that time of your free time, please consider becoming a paying member. All right. This is what we do all day long, every day. And we're making better traders on a daily basis. Okay. We're all going to make mistakes. We're all going to have rough days from time to time, but in the grand scheme of things, the majority of the people in our community are much better traders than they were when they first started with us. And that is something I'm very proud of. And with that said, I hope you all had a fantastic day today. Hope you made money. And if you sat out, congratulations to you. If you lost money, I hope it wasn't too bad. And till tomorrow, I love you guys. See ya.